can hear and see Vishal's screen. Namish, I think I see you over there. Can you shout out in the questions? Let me know if you can see, or anyone else.
Mm, all right.
All right, David says he can hear. Perfect. And you guys can see Vishal's screen? Perfect. Yay! Vishal, you want to flip through a couple screens, just make sure that everyone can see like that this screen is changing.
Well, it's the same screen. I'm not gonna change the
Oh, okay.
screen.
All right,
Yeah,
gotcha.
yeah.
All right, cool.
I
All
was
right,
gonna
then you're all set.
choose a monitor, which monitor to use, but I'm gonna keep the same screen.
All right,
Anyways,
awesome.
we are recording right now, so we'll just jump straight into this open session today. So briefly, we're gonna talk. Actually, before I even, I'm gonna open this up real quick, and I got a few things that I'm gonna show before we uh, jump into anything big here. So let's see if I can pull this up. Okay, there we go. So let's start with some basic, our usual SPY, QQQ, and IWM um, charts. So, we've been kind of in a very consolidation phase in last few months. Consolidation, not much movement to the upside, but we finally saw some, relief rally last 1 week, kind of like what we saw back in February after that pullback, and we saw some 5, 6 green days, and then we kind of consolidated and then moved much higher. Then we pull back, and then again we tried to do this in April, and then we pulled back. Now last week we saw some relief rally. We saw nice 5 to 6 green days. Um, in this kind of market, when you see these 5 to 6 green days, it's pretty nice and relaxing, and it makes you happy. The only difference that I'm seeing compared to, well, I guess if you look at the volume the entire last year, it's nothing much. It's no different than what we saw this last 1 week, except what we saw in February, was we saw some little increase in the volume, but we're back to what we were back in last year. And we kind of moving, the only difference that I saw last year and this year is that, or this past week, is that last year when you see this volume back in July and stuff, even if it's low, you didn't really see much big green days. You saw, tiny, tiny green candles on those low volume days. The only difference that I saw this time was with the same kind of volume, but the spikes a little bigger. So to me, that's not a conviction. I don't personally uh, buy this uptrend. We can, especially compared to last year to this year, the market has completely been changed. So my main talk to this thing was to kind of cover the volume perspective of it. If you're a day trader, if you're a scalper, like many of us are, and we also at the same time want to have some longer positions, if you're a scalper, low volume is not going to make any difference. You scalp within 15 30 seconds, maybe a minute or 2 minute trades. That's a whole different thing. But if you're looking to, let's say you want to buy longer term positions, this is where you got to start looking, be very careful, because we saw the entire last year at low volume, and then suddenly we saw some heavy volume come in. So right now we at this, if you look at the chart, you're seeing some nice, this trend line goes back from 2016. Let's say the weekly chart goes back to the 2016 pullback we had in January, February, which is the same what we had in August. So basically, we had a pullback in August in 2016. We came back down, retested that time, the support or the lows of August, and then we made a trend, a nice rally since then. We could easily see that same thing here. We came down here. Now we can kind of move up and then make another August, September, October downtrend and then rally again. So kind of the same pattern here so far. but we're in this wedge. We broke out in January. We came right back down a week later, 2 weeks later, and then since then we've been in this wedge. Now we are at the top of this down channel here. So we can easily, if we break out of this on weekly, that's a very good sign, and we can easily make an to go up to this 275 to 280 level, or we can or this we can just consolidate in this trend, and then once we get to this edge, we'll find a direction. So it could go either way. In this so far, we haven't really found a direction. We've been just in a channel. So it's good, like after, like over here, we found a direction. Okay, we're in the channel, uptrend, 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 uptrend. So we had a direction of the uptrend. So far, we haven't seen anything as of yet in the last month or so. So just to keep an eye on it, if you want to go longer positions, just be a little careful. If you want to add, start adding, add a little bit small positions, but don't go all in at this time, is what I would suggest. That's what I would do. That's it. Just don't go all in yet. Just try to add a little bit here and there. Average down if you get a chance. If it goes higher, take your profits. It's that simple. So this is the S&P 500 chart. It still hasn't broken out of this wedge yet. If we look at the QQQ on the weekly, it broke out. It broke out very nicely last 1 week. This last week, same pattern from 2016. Nice uptrend, broke out 2 times. Broke out in January, came back down, broke out in March, came back down. Now we are back up at the same top of the up channel, the uptrend channel. Could we pull back again and come back down? Sure we can. Sure we can. Only thing it would do here is that it would make this line kind of go this way until we break this top line. We're still in the wedge. We're still in the wedge. So far, I'm going to just keep this line over here. That's what I had so far. So we did break out last week. We could easily pull back here and just be in this channel. So I would keep an eye on the QQQ as well. Tech has been doing good. I got a few people. I know we have not a lot of people today, but for Mother's Day, but people have DM'd me some stuff to look at. So I'm sure that if they watch the video later, the recording, what the tech stocks will look at the patterns there. Some are still very oversold, some are still very overbought. So they're in the territory where you gotta be very careful on what you go in and which one do you buy. And let's look at IWM. Now this is the same thing on IWM, a weekly chart, but I'm also gonna show the daily chart on IWM because it's very nicely, very nice pattern on that one. So we're in the channel. We broke out during the election year in 2016, and then we came right back in the channel. Been uptrending, and now we are stuck at 160. If you look at the weekly chart here, you see it very clearly that I gotta find this. There we go. So you see this one top, two top, triple top at 160. Every time it hit 160, it had a nice pullback. 2 weeks back to back. I mean, if you look at it, this is a weekly chart. So 1 week from 160 all the way down to 141. That was the February 9th pullback. Came back up March, all the way down to basically in 3 weeks back down to 147. Now trying again. Could it come back? Absolutely. Could it break out? That's what I'm hoping for. And I would love to see a breakout. If this breaks out, there's a lot of room to run on the uptrend. It will be back in this channel and possibly make to that 165 to 170. Looking at the daily chart over here, which is which I will talk in 1 second on the candle patterns. It stayed on 160 here for 1, 2, 3, 4, 5 days. It couldn't break out, and then it had a massive pullback in February, and again in March it tried to make it here and then just pull right back out. Now again we saw a double top here at the 160 on Thursday and Friday, right there. It couldn't break on Friday. Even it hit 160 on Thursday, it couldn't break out on Friday. And after this massive 5-6 day rally on here, don't be surprised if it pulls back down to this 156 level, like this line over here that's going down, the downtrend line. It can easily pull back to this 156 level and then try to make its way back to from 160, break out 160 and go higher. So don't be surprised if that happens. After this nice 6-7 day rally, profit taking is imminent. People want to just be careful, and especially now in this kind of uncertainty market, you sleep overnight, anything can happen. We wake up and you're down 400 points for no reason. So just be careful on that thing. So yeah, double top here, possibly could see a nice pullback in going into next week. So that's what I have so far on this FI, QQQ, and IWM. But let's look at some. I said we're going to look at some candle patterns. So what? Where we go? There we are. So what do I mean by candle patterns? Basically, your hammer, your bearish engulfing candles, your dojis. And what if you see them? What can you expect the day after? Um, Now, sometimes it will not work out. Sometimes those candle patterns might deceive you because of the related to the news events. You see a doji or you see a hammer, but then you see a negative news come out the day after on the stock, which can easily ruin that pattern. So let's look at Apple here, and then you will see some different chart patterns here. So this is your nice back in February 9th. You see this nice reversal hammer, which you basically saw on every single SPY, QQQ, IWM. It hit the 200 SMA, broke it, and then nice reversal hammer on the Friday. And look at that nice rally the whole next week, Monday, Tuesday, Wednesday, Thursday, Friday. All 3 days, it had a massive, nice rally. That this kind of hammer is showing you that you have the buyers coming in at this candle because you opened it, so the high of the day over here, and then you opened it, you closed it at the second lower level, but then look at all the buyers coming in here, and then next week you saw this massive rally. So that's what you'll see in the hammer. And if you look at the hammer again here, this was not as big of a hammer, but you saw the buyers coming in again, and then you saw the massive rally again on Apple. This was right before the ER. Let's look at the bearish engulfing. The bearish engulfing candle is usually a small green candle a day before, followed by a massive red candle, and then you'll see a pullback. Even though you saw this nice, but then again, this candle is showing you that there's some profit taking going on. It's green doesn't mean that it was a green day. It was a profit taking day on Apple, and it spiked, people took profits, and the next day you just saw it come down, down, down. So this is what I'm saying. This is a small green candle followed by the massive red candle, and then you see a change in trend, which is a bearish engulfing trend. So you played this from 185 almost all the way down to 165-ish. Nice $15 move, or $20 move actually. Yeah, so nice pullback here. Now here you see a doji, which is basically a massive profit taking coming in after this huge rally. But what happened? Since there was so much momentum behind Apple on that Warren Buffett news, it didn't really pull back much. Myself, I bought some puts on this candle. Next day, it gave me that the drop I wanted to cover my puts because you saw the buyers came in. It pulled back in the morning, and the buyers came in, and I sold my puts on the bottom. The same thing happened up here as well the day after. It pulled back, the buyers came in, and it had a nice rally. And then going into Thursday, it made a new all-time highs because you saw the buyers coming in, and you're like, you know what? There is still some momentum left in Apple. Now Friday, we saw some different change in direction here. So now we saw, it was down to almost $1.50. People trying to take some profit. And also, if you look at it, the Buffett news was on this particular day. This was the ER spike. The Buffett news was on this, which is this candle right here. But then look at after that, the volume just decreased. So there was still momentum behind it, but there was not much not much volume behind it. So going into next week, I'm short on Apple. I'm not holding any positions, but I'm bearish on Apple. I would look to at least see a pullback to 185-ish, and then possibly filling this gap up in near future. So yeah, we'll look at. Let me just kind of zoom this one. There we go. So look at Alibaba. Now, inverted hammer is the same as the regular hammer. If you see the hammer on the bottom of the chart, on the bottom of the trend, it's the bullish bullish move coming up. If you see the exact same thing on the top of the chart, top of the pattern, it's a bearish thing. So you see an inverted hammer on Alibaba here on 419, and then you see a nice pullback all the way from 185 to 165. Then you see this hammer built up over here at the 165 level, and then you see this nice rally from 425, from 165 back to 185. And a nice a week or 2 weeks move here with the inverted hammer and the regular hammer. Now we saw a hammer here again, an inverted hammer, but like I said, it was a news. It had ER next week, and guess what? It had a nice pop. So this hammer was a deceiving hammer. Um, you saw buyers coming in right before the ER. It pulled back massive. You had buyers coming in, and then boom, the earnings were really good. So that didn't really work out. You would expect a pullback from here, but since it was an earnings move, it's a whole different ballgame. Now, Thursday, Friday, Wednesday, we saw some profit taking coming here. Thursday, we saw some massive profit taking, all the way from 199 to 194, and then Friday, you see the red candle. Now, this possibly could see a couple red days here, some more profit taking to 190-ish level, and then move its way back up. So usually a shooting star is called a shooting star. Your profit takers coming in at this level, and just see a little pullback here, and then probably go back up. And then we'll look at Splunk. Let me just zoom this one on a little bit as well. Now, again, the same shooting star, perfect example now, because you see that what happened with the shooting star here is that you saw went from 115 all the way to 95. So profit taking happened here, and then now you're seeing how that worked out for next 5 to 6 days. A red, red, red. Some consolidation here, and then try to move it away to the upside, and then again a nice rally in last week or so. Now you see it got troubled at that 117 level, 118 level Thursday and Friday with a double top here, and with a shooting star. Not as big as a shooting star over here, but still a shooting star with a double top, some profit taking coming in after this massive rally. We were surprised to see a pullback down to this level over here, which is a support at around 105 level. It's a pullback, but they have earnings coming up. So nice pullback here before the earnings, and then pop on the earnings. So we'll keep an eye on this for a nice short position going into next week. And now we're going to jump into the open session, which is what people are holding and what stocks they want to see. So I have a list here that I'm going to finish, and then if you didn't DM me or didn't ask me, I will you can type in the question channel, and I will gladly answer. So let's just go over what I have first, and there's quite a bit of a list. So the first one was eBay. And I'm very happy that I'm seeing some stocks that are very unusual. Not of course there are some regular stocks that we see, the fangs and stuff, but there is some very unusual that I didn't even know existed. So I'm very glad, it's very unusual even for me to keep an eye on, keep a look at it. So let's look at eBay. They had earnings on 4/25. Okay, dropped on earnings. Let's see what we got here. Price level. Now it stopped right. So basically, it held that support from here. Also, kind of filled this gap that it had. Well, actually, it filled the gap back here, but again, it held that support from the from November. So this is the gap down. So it held that line. Very good. Now it needs to, and again now it's at the resistance. There's a resistance over here. You can see it had a hard time breaking over here, and then it popped after that. It came back down to that line and popped back up. So now we are at the resistance of 38.69. It tried to break on Wednesday, couldn't break it, and even Friday couldn't break it. So what can happen here is it can easily, and you also seeing some profit taking coming in. You're seeing those upper shadows. That over here, you see this a shooting star right here. A shooting star came in, and then a nice 1, 2, 3, and then the earnings dropped. Just kept going down. You could have shorted this from 42 all the way down to 37. A nice, short on that one. So what I can see is maybe one more test down to this level and then a pop. That can possibly happen, or it can just come down to this level, which is around this line, which is support is 30, 30, 38 level instead of 36 level, 38 and then pop. But after ER, I would see some consolidation sideways and then a pop in near future. So that's what I have on. That's what I see on eBay. I know we had Adobe. We had this cloud stocks today, which have been on a massive rally in last week or so. So let's look at Adobe. I'm going to draw the Fibonacci because I had this Fibonacci right from this line all the way down to this line. And so actually, it was not. It was actually kind of down here at the 231 mark. Yep. And then I'm just going to bring this up. Yeah, that's fine. So it broke out finally. It had one top, two tops, three tops, and then the fourth time it really literally just broke out, and it just nice pop. Now what we're seeing here is kind of a double top or at the 242 level Thursday, Friday. Even though it made a new all-time highs, it still got stuck at a 242 level with the inverted hammer. Could easily come back to 231 to this previous resistance line over here and test it before it goes back up. It has the earnings coming back in June, so a nice pullback here to the 231 wouldn't be a bad thing, and then it can pop back up because usually it's a very good thing for a stock to come back and test this old resistance. So let's, I will be keeping an eye on this for a nice pullback and then a pop. Same thing with Salesforce CRM. It finally broke out, but look at that rally that it had, a massive rally since that last week. A 425 made a hammer on a daily, and then look at it. Buyers came in here at 114, now it's at 131. So within like 15 to 20 days, or actually you said 10 trading days, look at this nice $15 move on it. Nice move. I see the pullback support line at this level, which is the 128.05, and then if that doesn't hold, you got some support around this 124, and then at this level of 118. So earnings are next week. I think it's 529. I think that's next week or 2 weeks. I think. But yeah, so again, the same kind of thing. Double top at the 131 with some inverted hammer. Could easily see a pullback. You see the hammer on the bottom of the chart, and you see this nice rally. Now you see on the top, could see a pullback to maybe 128 and 124 before earnings, and then pop on earnings. So the next one is do some. So yeah, I was told to cover these two stocks that had been in a rut for last year and a half to 2 years, Disney and Starbucks. So I want to actually make this into a 3-year time frame because I want to show what's Disney been doing in last 3 years. What are you seeing on Disney in last 3 years? What are you seeing? Where has Disney gone in the last 3 years? Nowhere. Literally nowhere. I mean, support at 96, resistance at 112, 114. Yeah, it broke out here, but guess what? It broke out and then right back up. Broke out, right back down. Broke out, right. I mean, literally, it hasn't held that breakout for more than few days. Not more than few days. Nothing. It pulled back here and then right back up. And that pull it took a while for it to. It took almost 3 months to get back over 96. It took 3 days to get back under this channel. That shows you that there's not many buyers, but a lot of sellers. Like people are not really interested in holding the stock. They're just trading it. So this is what Disney has been last. So you can, if you really want to play Disney, you buy at 96, sell at 105, short at 105, cover at 100. I mean, you can just keep doing this pattern, but don't try to go long on Disney at all. Personally, I would not suggest that. It's just not doing. Even look at all the numbers from Avenger movies, Black Panthers, amazing numbers coming in. ER last week, but guess what's going on? No movement. Nothing's going on with it. So it's just stuck in this trend, stuck in this this channel over here. Same thing with Starbucks. It's a 3-year chart. Again, let's draw this channel. Let's just draw this right here. This is the top. This is the bottom. 61 and 52, a $10 range in last 2.5, 3 years. Nothing. Again, the same thing. Every time it gets back up, pulls back right down, and then just stuck down all the 52. Again, back up 62, come back down. It made this high over here. Just 2 days later, right back down to the channel. Came back down 52, again 61. It's just stuck in this range. There's no, unless you really want to play this. I mean, but there's nothing going on there to even being long into the stocks. Okay, so let's look at Facebook. That's been on a nice rally. I'm gonna go back to the yearly chart because I think it's just a little much better. Now on Facebook, we know what happened with Facebook with this gap down. They had some negative news. Now you can say, oh, look at this big hammer here. Why did it go down next day? This entire thing was news related. Even though you saw the buyers coming at 149 all the way to 159, it was trading in $10 range every single day. Look at the day after. You had this, it popped. People took their gains as soon as it popped from 162 all the way down to 150. Like it was just going in this $10 range until we had the Mark Zuckerberg in front of Congress, and then when he spoke, it kind of stabilized. It kind of cooled down. All the sellings kind of cooled down, and then you saw the hammer right before the earnings, and then it popped on the earnings. Now it's been on a massive rally. Personally, I would like to see a little bit of a pullback on Facebook. I think it had a nice run. It broke out. It's been doing really good after what's happened. So it got some support at the 186. Right now it's almost at 187. So 186 and 178. That would be, and then I would over here as well, which is the 182 level. Pull back to 182 would be nice, and then possibly break out and go to that much awaited 200 level on Facebook. I think now it's out of the woods with all the negative news that had to happen. I think it can easily make that move to 200 now, at least this year, I think. But a pullback here after this rally. And also, if you look at this chart, look at the RSI here, way overbought. RSI has been way overbought. If you look at all these green arrows, it's been oversold, and then it popped after that. Now it's been overbought, and it needs to have a little bit of a pullback. Excuse me. And then look at the MACD, like way overextended. A little bit of a pullback here would not do anything bad for Facebook. Let me just remove the studies real quick, and then Facebook, we got BA, Bowen. Boeing is right here. Actually, I'm gonna close this real quick. Okay. So Boeing, again, this kind of a sideways. Nothing much going on here. Made an all-time highs in February. After that, and look at this. This is a perfect example of a shooting star, actually. A profit taking coming in at the top of this candle, and you'll see different names. People will call it shooting star. People will call it evening shooting star, evening doji star. They all look the same. They are just a little different, but they all have this upper shadow. I have a PDF that I made last night of pictures of these candles. I put actually from these charts. So I will post that PDF and I will pin it in the Discord chat room. Just a very few common chart patterns that I usually watch on a daily basis. So I'll have those up on Discord and I will pin them. So just for watching it on a daily basis. But right here it made all-time highs, and since then it's been just channeling between 310. 310 was low, pulled back much, but 310 and then 340, 350. So it's a nice $40 range for Boeing. But for Boeing, that's nothing though. I mean, it trades almost $10, $11 sometimes in a day. So a $40 range in the last 2-3 months, even after the earnings, it hasn't really done much here. Just kind of just channeling. So it really needs to break 350 here for that up movement. It's been stuck at 350. Once it broke here, It couldn't break it on this day. It couldn't break it on the earnings day, and now again last week at 348. Gotta break 350 for that move to the upside. We got Red Hat again, one of the cloud storage, all that cloud service stocks. Um, Again, nice rally, had a pullback, came to 121 on February 9. Right now it's at 172. Massive rally, massive pops, massive rally. Good numbers back in Feb. Had a pullback on the earnings. They had a good numbers as well because obviously it ran so much that people just took the gains here. And then since then it's been on a nice rally. It finally broke out here. It broke that 167, made the new all-time highs here, and saw some profit taking coming at 173. Inverted hammer here, kind of, and should see a pullback to 167. At least test that breakout, like just like Adobe. Come back, test your previous old resistance, and then pop. Go much higher. And Square. Now I was in the stock. I had a nice play on this one. At least I think I was in at 48 this day, all the way to 55. So I had a nice $6 range on this one. Good play. But now earnings happened here on this day. You see this nice shooting star profit taking on the earnings day, right? Massive candle coming in, profit taking, a pulse back right down next day, but people come and buy it. And now massive rally. They also had news, so it's a news related event for this rally. But now what do I see here is 2 days back to back, it had trouble breaking 56. It's exact same candles. This is a doji candle, exact same candle. Equal balance though. You cannot say there were more buyers than sellers. This is pretty much an equal candle. So equal amount of buyers, equal amount of sellers, closed evenly. But 2 days back to back, you saw a double top at this 56 level, 55, 50 level. So what happens here is maybe a little pullback, come down and test this line over here, which is the 52. And if that doesn't hold, 50 obviously will be the psychological support. But they'll also have an investor day coming up, I think May 17th, I believe. So it could pull back here and next day and then just pop on the IR day. So double top here, 55, 50 needs to break for it to go ahead and test the all-time highs. Google. So same kind of thing on Google here. A couple of things I'll show again is, let's say here, right? This is back on January 29th. Nice shooting star here, back-to-back shooting stars here, and then you saw some consolidation. Maybe you saw, equal, just kind of a red days here, a couple red days, and then just earnings came in and it just dropped on earnings, and then the Feb 9th event. So right here, if you were a chart person and you're watching these candlesticks, you're like, you know what? It went from 1198 all the way down to 1187, a $10 pullback. Same thing here from 1187 all the way down to 1178, again a $10 pullback. So down $20 in 2 days, and you're like, you know what? Okay, let me just take my gains after this massive rally from here, and then you probably could have just went right back in here. Now again, same thing here. Double top, couldn't break that 11, I think it was 1109, I believe. Yeah, 1110 right here. So I had a massive little trouble here. Look at it, went from 1005 on a Thursday, week before, all the way to 1109. $104 move in a week. It's massive. A $10 run. So a little pullback here, maybe to this level over here. I'd like to see is 1085, and then maybe support at 1055ish. I think over here. Yeah. So wouldn't be a bad thing. I mean, it's still giving half off, but I would still like to see a 1085 for an entry, and then maybe keep an eye on that level to get back, and then 1055. I'm going to look at Caterpillar, and then we're going to look at Home Depot before we jump into the one. And I think there's Lowe's as well. Okay, so Caterpillar, I entered a short position on Caterpillar on Friday. I'm holding a short on Cat on Friday. I got in right around close. So why I got in at close is first let's say why I got into Cat short. So earnings happened here, a nice pullback. They kind of said negative news on their earnings conference, went down. Now what happened here is that it tested that 200 SMA on, after earnings. I think they had some price downgrade on this day, pop right back up. And last 2 days, I'm seeing some profit taking coming in. On Thursday, some profit taking. I saw some nice profit taking on Friday. Went from almost 138 to 156, almost $18 move in a week. Nothing bad with taking some profits, also getting overbought here a little bit. So I like to see this pull back at least till this line that I have is this well, let's say where do we go here? I would say this level right here, actually, the 152-ish. Yeah, so because it has some support at the 152 level. Over here you can see it held on 152. Here it was holding up again here. So 152 pullback here was not a bad deal to get back in. So I'm going to probably cover my short at 152. The only thing is that my options expire next on coming Friday. So I'm going to hold it on Monday and maybe Monday. And if I get that move on Monday, I'm going to hold it or take my gains on Monday. If not, I want to hold it at least till Tuesday and then take my gains. I believe I would get this profit on this one at least till 152. Then we got Home Depot. Now, Home Depot was a nice play. I know few of us had a good play on this one. Tech Money was the one having his PowerPoints on retail stocks, I think, and he, that was a nice play on this one. I think I know me and him got in at this level over this candle. I'm sure there are other people who also bought a Home Depot on this day on his alert. And look at this nice pop, a nice pop to 186, a pullback here, nice U shape after this massive pop, nice U shape. Look at this hammer here, came down to 181, got bought up again, tried to make 186, could not break it again, came down to 180, again got bought up again. So let's look at this nice, every pullback to the 180 was getting bought up, 182 got bought up. Look at this nice U shape. And then obviously they have earnings coming up on 5/15, I think, which is Monday or Tuesday. I don't remember the dates right now, but pop, nice pop. Now it got stuck at 190 right here. Also a resistance, 190, 191-ish. Now if they have good numbers here, and also look at it. I mean, this went from 165 in November to 207, huge rally here. Pull back, nice consolidation here now. Could easily pop. If they have good numbers, could easily pop to 200 plus easily. So so I would keep an eye on this. I would personally see 194 before earnings, and then maybe pop to 200, and then go ahead and make that all-time highs again. Test those levels again if the earnings are good. And the other one is Lowe's. This one I spoke about it on Voice on I think Wednesday. It was a nice scalp. I know I sold on the same day in like 30 minutes. It's a nice play, but look at it, like Lowe's. I been in this thing, right? Every time it comes, could look at it, like 81 was a strong resistance in the past here. It had earnings pull back. 81 held on, came down. 81 held down over here all the way for 4 or 5 days, or for actually 4 or 5 weeks. Came back down again here. It held up and it pop, came back down, and a huge rally again, just like Home Depot from November all the way to January. Then they both pull back. It's been consolidated. It came back down to 181 again, right here, held on to it. This was Wednesday, Thursday, Friday. Friday had a nice pop with Home Depot. Now, if this one gets above this level, which is the 88 level, and also the 90 level, I think it can go ahead and fill that gap to 96. It has earnings coming up on 5/23, not confirmed, estimated. But if Home Depot pops and they have good numbers, Lowe's is going to pop with Home Depot without any news. It's going to pop just because of Home Depot. It's going to pop as well. So I would keep an eye on this. But if Home Depot drops, this can easily come down. It gives you an entry at 81 again, and before earnings, and you can again re-enter before earnings on Lowe's and play that uptrend. So you can play this both the ways. So I would keep an eye on Lowe's. It can easily break out here and then can possibly fill this gap. And do I have anything else? I covered Splunk, okay, and Amazon. Okay, that was the one. So these are the ones that people DM me. Now, if you have any other stuff that you want me to look, just put in the question box and we will go right over it. I see there are a couple, so we'll take care of those. Now, I mentioned this on the voice the other day. Let me just open the Google chart real quick right next to it. And I want to show this real quick to you guys. Let's see if I can do this. There we go. So I want to take all the lines out of Google. So now you're seeing Google chart and you're seeing Amazon chart. The big thing that you're seeing on the I'm gonna kind of zoom this one in and this one in, and you see this back on 10/27 October. Amazon had earnings. It popped on the earnings, and it just since then it's been unstoppable. Same thing with Google. It popped on the earnings. It's been unstoppable. What's the difference that you see between Google and Amazon? Google's the only one that has filled the gap from the earnings. It's the only one that actually has filled this gap, which is a very bullish, and it has actually held down to that level. It held on to that gap. It has not cracked under that gap limit, that gap level, and it's been nicely consolidating since then, which is a great thing. Amazon has nowhere near, and that's the scary part, right? If Amazon does pull back, that's a massive pullback on Amazon, which will really lead the tech down, because right now everything is weighted on Amazon since it's been on such a massive rally. Amazon hasn't filled this gap from this recent earnings as well. So now I'm going to take this Google thing off since we got the point of that gap fill. I'm going to take this off, and then so that's one thing that you have to keep in mind. This possibly can happen, in my opinion. I won't be surprised if it happened. I understand that you're talking about a $500, $600 drop on Amazon. Yes, that's a massive, massive drop, of course. But since they're so hyped up, there's so much, heavy. People are expecting too much from Amazon. One bad number, one bad news, one bad, thing from Amazon, it could lead to that thing. It can easily lead to this. So far, Amazon had not have a bad news. All these red candles, this is just a market pullback. This is not an Amazon thing. Amazon been reporting great numbers. Even on this Feb 2nd, market was red, and you see this red candle here, but Amazon actually was overall a green day on Amazon. Even this earnings, massive numbers. So far, Amazon has not had bad news at all, which is a great thing. And if that continues that way, it's going to keep going higher. So, but if any bad news from Amazon, you can easily, it could happen. That gap could get filled. Personally, I would love to see that gap filled. That just shows that, that will just be a very good thing for the longer term for Amazon. But not every gap is meant to be filled. Let's put it that way. Not every gap is meant to be filled, but you never know. So eyes on this one, for any kind of a negative news, because that could really bring it down. And if that happens, even if it doesn't happen, even if the market pulls back, Amazon got support at the 1560, which was the earnings pop, and then could easily have support at 1459. In between, you have support at 1527, and then at 1409. After that, there's, you got a bunch of support here. I mean, you got support at 1347, and then these are all support lines. These are all support lines. But it's just scary, right? I mean, you're looking at this right now at 1602, 1290 is still a $300, $400 drop. So, you just be open-minded, just be careful with these things. Okay, so let's just take questions here. We got Tesla. Man, look at all the Tesla thing I have on here, huh? I don't even trade this thing, but I just like to watch it because it's just fun to watch this thing. But I don't trade this. Well, let's look at it, why not? I'm gonna do a 3-year chart because a 3-year will show, this is a weekly, so let's just do 3-year 1 day. There we go. Tesla. Let's look at this. This is 2015, 2016. This is last year, actually. So 2016. Yep, 2016, 2017, sorry. And then 300, 250 is a strong support. You can see here it broke out here, 250, came back down, 250. This time again, we held 250 on that pullback in April. 300 is the key level for Tesla. Every time it breaks 300, it pulls back. I will also go over MU as well. I will talk, just give me 1 second. I would do MU. 300 is the massive support. On the uptrend, it's a support for the down and also a resistance. It's the level that needs to be watched. It had trouble at 361, 1, 2, 3, 4 times at 361 level. 300 held on to it 1 time, 2 times, 3 times, and the 4th time it just pulled back. It just broke. Now it came back to 300, couldn't break it. Earnings happened, just came back to 270. So it really needs to actually get back over in this like 320s, 315-ish, in this area for it to be, out of this 300 level. 312, 314 needs to get past. It can then possibly make that 328 to and move higher. But I think they also had a negative news this past weekend. I think one of their car crashed. So we'll see what happens on Monday. Usually on Tesla, bad news is a pop, good news is a drop. So who knows? But I would keep an eye on this. It can, if it closes at 301, I mean, it can easily, again, doesn't really have much support until 290-ish on Tesla. So I would keep an eye on that one. Let's do MU. So I actually got in on MU on this particular day, on this 5-1. I bought some $48 calls for July. Why I bought at that level, I'm gonna, let's see if I can do this 3-year chart. I keep doing this weekly. There we go. So 45 was the previous resistance, and hence I bought at that level. So you can see the 45s here holding it up. Here as well, didn't really break out, finally broke out here, the 45s, went for a massive rally, now came back at 45 and then holding that support at 45. So I got in at that particular day of this candle, and I got out actually on this day at 49, and I missed this nice pop. I sold it a day or two early on it, even though I had July calls and I was nicely green on them, but I missed this nice pop on here. Now what I see here is a possible resistance at this, and around this 53 level. It came to 52-ish. A nice double top as well, a green day, and some profit taking happened on Friday. There's a gap to fill here, so we can see this pull back at least till this 51 level, and then if it doesn't hold that, maybe around this 49 level. So these levels that I'm going to watch on MU for a re-entry for their earnings. So yeah, so and if it breaks 53, it can move higher to this level of 55-ish. So I would keep an eye on that. But I think we'll see a little pullback here. Maybe this gap gets filled in the next week, and then it breaks out again. W day, work day. Again, one of those cloud storage things, they have been on a massive rally. So, and then obviously you saw this nice red day on Friday, starting from workday. Broke out here at this level, which was the 133. It hasn't really made any all-time highs yet, right? I mean, it made the all-time highs back in March, and then it broke out again this past week, broke 133 resistance, came close to the 140, 138 level, nice pullback, maybe go back to 133, retest that resistance, and then go back up. They have earnings coming up in end of May, possibly could go back to 133 and then break out and then make that all-time highs with the earnings if the numbers are good. So, but again, it's all related to the market, right? If the market pulls back massive, these are going to get pulled back massive. These levels are not going to matter. So this is just a stock based. I'm talking about one particular stock. Overall market can get pulled back massive next week, and these can just go back right back to 127, 125. But this, from what I'm just talking right now, is just a minor pullback in the chart, minor pullback in the uptrend. It still holds on to the uptrend, but just a pullback before it makes the next leg up. But if the markets pull back, it went from what, February 9th, where is it? Right here. Went from 121 all the way down to 107, and went from 140, went all the way down to 120. So if the market pulls back, that can get pulled back easy as well. There's Fossil. That's interesting one. Never done that before. So let's look at this, a 3-year chart. Really, a lot of earnings drops here. Well, let's see, in last 3 years, drop, one pop, drop. Been only bid what, 1 or 2 earnings in last 3 years. There's a lot of gaps here. So let's look at it. Right now they had earnings. They had the earnings. Wow, okay, yes, last week, and nice rally, great. So if it continues, let's say it got some resistance at 2088 is a resistance. If that breaks, it can fill this gap. I mean, I won't really expect it to go all the way higher. I mean, that would be just a little crazy, but can expect at least 22, 2251. I mean, I can see that in the near term, but that's about it. I mean, it really needs back-to-back earnings beat, back-to-back some good news for it to really get back going. But 2088 is the resistance, and then possibly gap fill to 2251. Got some support at this level, nice support at this level of maybe, which is this level, 15, and then 13. So yeah, so I would keep an eye on this. I don't personally trade this, but yeah, I mean, if you trade this, I mean, if you're green, just watch the 2088 level to break. If it doesn't break, then take your gains, I guess. But if it breaks, then you have some at least that room for that run, for that gap fill. We got LMT and WTW. So LMT, okay, so I'm gonna actually pull this 200 SMA on this one, because that's the key one. And I'm gonna show you a couple of things, why it bounced from that level. So obviously had a nice earnings, they had a good numbers, but obviously I think the North Korea news didn't really settle well with the LMT market. First of all, that was also a triple top at the 362, 1, 2, 3 pullback, and a massive, I mean, 362 to all the way to 300. The first day it had a pullback, it bounced from the 200 SMA. That held on to it. It bounced back up, had a green day next day, and then I think this is when the North Korea came into play and the news came into play, broke that 200 SMA. 300 actually held on to it. 300 is your psychological support. It's a round number. 300 was the nice pop from that level. It was also very oversold from this massive drop. MACD is curling up, trying to cross over here. Volume has been dropping in the last couple of days, so that's the only concern. But a nice pop from the 300 to 330 in 4 days. A little maybe a bull flag here that I'm seeing back over 200 SMA now, holding 200 SMA here from last couple of days. Could easily hold on to it. Let's see here what we got here on the line. So 330 obviously made sense as also a resistance now to the previous support. So 1, 2, 3, 4, bounced 4 times. Now it's going to hold up to it. It's going to hold on to it as a resistance. If it breaks 330, that it goes back, it goes nicely back up. So it got some 336, and then it got some 345. So it really can make this nice U shape and then probably pop from here. But this level got to hold. 200 SMA has to hold here. What else we got? We got AMD and Walmart. Okay. So with AMD, I'm gonna take these all. Show this real quick. It's overbought, just so you know. This has been nicely overbought for last few days now. So you know, this is earnings pullback, popped on the earnings, nice rally in last few days, getting overbought. The MACD is pretty overextended, seeing a little kind of resting here. So could see a little pullback on the MACD, crossover here, go a little bearish for a couple days. So let's just take these lines off, all these SMAs, and let's check this out. AMD, I don't really trade this much either, but has some resistance at $12. Round number, as always, will be an issue. But what we got here is we have some support at this 1156. You know, we held on to it 1, 2 in the past here. We finally broke it here, a massive red coming in. So break 1220, it really can go to what, 1282. You know, this is not a big mover. I mean, it doesn't really move, you know, a few dollars. It doesn't really do that. A few cents, 30, 40 cents a day. You really need to just kind of, if personally, if I know I was trading last year AMD and I was just doing stock. I would buy 1,000 shares, sell for 30, 40 cents pop. You know, I've done options one time. I got burned on them, but I would not trade options. They don't really move for me. Not really much juice on it for me to hold on long enough. But 1220, and the chart is so messy. I mean, you really can't see the pattern here. It's just so messy chart. There's so much red around. Good numbers on the earnings this time, but really needs to, basically, for me to be even bullish on AMD, you know, it needs to break this 1565. I don't even know what's the all-time highs on AMD. 1565, yeah. So for me to even go back into AMD, it needs to break this all-time highs, and then I will, you know, look into get back in it, and then probably play that uptrend. But until then, I'm just staying away from it. Walmart and then Symantec. So Walmart actually, you know, was not a good stock this week for some people. But it's just, you know, it was again a news related. No chart. It was a good news though. They had a positive news. They bought Flipkart in India. They went 77% in on it. But they also said it's going to affect their EPS overall, 30 to 45, 30 to 40 cents this year, and 60 cents EPS on the next year, next fiscal year. So that's a pretty drop. I mean, usually when you buy something, it should add growth to your company. It should be positive EPS, but they don't see that happening right away. So what happened is they were holding this. It was holding this 85 level, like this job. After the earnings drop it had back in February, it was just going sideways at 85, holding it between this range of 85 and then 88. We had this nice red. I actually got out that day. I actually was in on Walmart. I got at 85. I actually sold at 89 this day because I saw this reversal profit taking coming in. Every time actually Walmart went over 88, you saw profit taking coming in. Right here, people took profit. Now here it didn't happen. Here we saw, okay, got 2 back-to-back green days, and you see a pop, but the market also wasn't really doing good, so it pulled right back in the channel. 88 came up, it pulled back. Here it broke 88, 89, people took profits. So okay, so I was doing great. Now this gap from back in October, this was from the investor day, I believe. This is when this gap got created. Now it actually held this gap. Actually, kind of, let's make it real more here. So it actually held that gap now. It came back down, and now it filled the gap, so it's a very good sign. And not, in the last 3 days, it's been consolidating between 81 and 83. It really needs to get back over 85 for me to even consider getting back into Walmart. Now they already said their EPS is going to get affected, so the bad news is already baked into this drop. What else can they say on their earnings negative that's going to affect it more? I don't know. That's why I really will not play the stock into earnings, because you don't know what else can they say on their conference call that could even cause a further drop to maybe 77. So let's just wait for the earnings to be done, see what happens, and then you can always play the uptrend. But until then, I'm staying out of it. Is there anything that I missed? Win. Okay, yeah, JMax said win. I did not talk about win. And Symantec. Yeah, okay, I will do that too. All right, so Symantec, had oh, this is win. Never mind. Sorry, I was thinking why is it 200 for Symantec? It's not. This is win. Double top on earnings, double top, actually not on earnings, but double top last week. They have some positive news. Saw some profit taking from this rally from 178 to 200 to 202. I think they got some support at this 193 level, and then at the 189 level. Should hold. Has been doing really well, even after the negative news from Steve Wentz. Has been doing really well, holding pretty strong. The Macau numbers are looking good as well. So, a little pullback here is not a bad thing after this nice rally. Should come back to 190-ish one at this level, and then probably go back and break that 203 level. I'm getting some more here. That's good. Symantec, look at that. That just doesn't look good at all. They had some negative news on their conference call. So let's look at the 1 year chart, and let's look at the 3 year, because I think that will give me a little better idea of the where does it drop here, where does it hold now. Yeah, so it actually, if you really think about it, it actually held on to the support here of $18, which was a resistance back here, but it actually was a support back in over here, kind of $18, $19 range. You would never find an exact thing, but nice holder support. But it's a massive drop. They had some investigation on their some kind of negative news on the earnings, and look at that drop. At this time, I really don't know what will happen. It needs to hold the $18 range. The support line, if that breaks come next week, I don't know, possibly 17, 79-ish, and then really at all-time lows of 16.14. You have to be very honest. That can happen. If that happens, I probably would buy it. I think that would be at the bottom of that one. But we saw some buyers coming in, though. This is a kind of a nice, like I was saying earlier, reversal hammer. Not really a hammer, but some profit taking. Some buyers coming in here. So I would keep an eye on it come next week. If this actually, consolidates here on the sideways here for a few days, it can probably move back up. Got some resistance at this $20 range. So nice. It can easily break. If it breaks 20, got a massive gap here. I mean, this would easily, get back up. I mean, if that news come out and be like, okay, we took care of the situation, whatever that happened, it could go back up. So, but I would watch this levels. I mean, 16 would be my buying point at this level, or break of 20. And Triple M, I think they have earnings coming up too, right? No, they don't. They actually had earnings okay, they already had earnings. Another one that I feel like is just beaten down terribly. So 192 was a support, bounced back up. In the past, it was a resistance. Once time, 2 times kind of support line over here. If this breaks out here at this, let's say 206, possibly a gap fill all the way to 215-ish, 214-ish. So I won't be surprised if it breaks that. Oh, where's the line? There it is. So 206 breaks that, fill the gap to 215. And again, if you get some good news on the tariff this week, this can possibly go back up. This is mostly tariff related, mostly this one, Caterpillar. These are like based on Boeing. That's why Boeing has been in that sideways movement, because we don't really have that. We have that tariff thing over our head, and I think we're supposed to get that answer on tariff this week or in a week or so. So I would keep an eye on those stocks, because they can either really move higher or pull back massively if those tariffs get implemented on China. So those are something we gotta keep an eye on. But Triple M, uh, just based on the chart, could break 206 and then pop to that 215 level and fill that gap. And then if the tariff news comes out positive, won't be surprised if Caterpillar, Boeing, RTN, LMT, these stocks make their way back up. So I would be on this eye on this defensive and the construction stocks. What stocks am I watching next week? JMac, I really haven't done my DD yet for next week. I'll be doing a video later today for the next week, so I would put that video up, but really haven't done anything yet for next week yet. I was just kind of getting ready for today, so for this class. But I will do a video. I have a video coming up later today, which will have the stocks for next week. So I will, after the class, I'm gonna spend some time more to do some look for stocks for next week. And for the most part, to be very honest, they're gonna be short positions. They're gonna be looking for that pullback. One thing that I want to talk real quick before, if you have any more stocks, please go ahead and post them. If not, I think we should be done soon. But before closing out, I just want to say one thing. What personal growth that I had so far in last week or so is that, I'm a swing trader. I like to swing. I'm not a big scalper. I'm not really good at scalping, but last week or so, I'm trying to do that because I'm not really convinced with this market. Let's just pull up SPY real quick, and I'm gonna leave this thing up here. And I'm gonna talk personally. In my weakness would be, I would buy a stock right over here. Let's say just over here, right? Let's say over on this day, on this particular day. Nice green day, I will buy it here. And I will like, okay, it's gonna keep going up, going up, going up. But next few days, it just goes red, 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 red. Now, there's nothing wrong with me holding that long position. I can still hold it, and be like, you know what, it's gonna go back up. I'm sure it's gonna go back up. I'm sure it's gonna go back up. But it just keeps going down and down and down. So why shouldn't I short it in the meantime to cover that loss? Why just wait in the hope of it keep going up? Why not just buy puts or short the stock, whatever you do, until you see the reversal? And you can, if I just held on to my calls, they go to zero, but I make a massive profit on those puts all the way down from this 280 to 259. So in the past, I would just keep holding, holding, holding. Okay, one red day, I'm gonna hold. Two red days, I'm gonna hold. Third red day, maybe I should cut it. Fourth red day, I'm gonna take my loss. So why even take my loss? Why not just short in the meantime and offset those losses? So that's what I've been doing, right? So now I don't even go swing. I don't even go long. I just scalp. I'm just doing day to day. I would swing once in a while, like I'm right now swinging Caterpillar just based on the chart. It has nothing to do with the stock, no negative news expected. I'm just shorting it based on that upper shadow has been coming in from last 2 days. That's it. So what I'm trying to do is trying to play both the side of the market. Before I was not doing it, at least this year, because last year I got so used to this uptrend, 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 green days, green days, green days. You buy one day, you buy in January 1st, you hold for a freaking whole week, whole month, and you sell at 280. Massive swings, amazing green days. Now you do that, you're gonna get burned. You can't expect it to buy on one day and hold for 3 weeks and be expected to be green. No, because you can easily get burned the next day. Look at it, you buy it here, and three massive pullbacks. So try to learn. If you're not sure, paper trade it. Paper trade it. Learn it that way. Try to look at your lines. Try to look at your chart patterns. Try to look at your trend line, support, resistance. There's nothing wrong with expanding your horizons, learning more. There's nothing wrong with that. If you're just a one mindset person, especially now in this kind of market, it's a little tricky. You need to know other ways of trading, other ways of how to deal with the market. It's not like last year. It's not like last year. I can tell you that for sure. Unless you break the all-time highs. Once you break all-time highs on SPY, yes, then you're back in that uptrend mode. But until then, right now you are still in this descending triangle, because right now, let's just take all these lines out, okay? And just look at this descending triangle so far. Nothing much going on here. Even though we broke out, you can say that. Let's just look at this. And but we're still we broke out, but we're still making those lower highs. We're still making those lower highs. We kind of broke out here. I'm still not buying based on the volume. That's it. I'm not buying this based on the volume. So I'm still very hesitant to go anything long. Do you have a direction to give? Do you have a way to give a direction in your day trading? I'm not, be talking about all that, but I'll just give you a little bit of an example here. Because everybody has a different style, right? Everybody looks at different things, but why on if you are watching on Friday in the chat room, and where did we go? Hold on. Right. So I was short on SPY at this level. All right. I'll just give you one quick example of why how I knew how I did the scalping, and I have my lines right here. These are my lines. I got a bunch of lines here. This is exactly what I had. I'm not making it up. This is exactly what I had on Friday. We made the highs. Now on a 5-minute, I'm seeing this little bit of a doji candle here. Next candle, it drops 273 all the way down to 270, almost 30-cent drop. I entered the put position right on this candle. Why? Because there's a massive sell coming in, a big red candle. I enter puts. I'm holding it, and literally, I bought next week expiration. I'm holding it all the way through. The small green, small red, it breaks my first trend line. It breaks my first support line. Comes down. Test this 272.36. I still hold on to it. It goes test that upper line, couldn't break it. Next candle again drops 30-40 cents. That's my next trend line. I'm holding it. It comes back to that upper line, test it, couldn't break it, comes down, breaks it again. This is where I sell it, because this is the support from the pre-market. From the previous day, it's a support. So previously support, held on to it today on Friday, and then look at the massive pop that came in. So I actually covered my puts right at the thing. All these lines, they worked out. I'm not the only one watching these lines. I always say this. People who do charts, they have the exact same lines. Yeah, a few cents up and down, but still, they're watching the exact same lines. Most of the day traders are chart traders. If you are a day trader, you are watching your charts. That's it. You cannot trade blindly without your charts, at least day trade. You can swing it, and you'll be fine, but you cannot day trade without your charts, period. And my lines will match your lines by a few cents up and down. That's it. So if I'm the one who sold it here, there are people who are actually waiting here to buy it. They probably sold it at this drop, and they were waiting for this drop to come and buying up here and then playing this uptrend. So you have both the sides of people waiting for that chance to get back in. I could have sold my puts here, which I did, and bought call right away, but then I didn't. I had a nice gain. I'm done for the day. Why one overtrade? So that's just one example I would give. Watch your lines, watch your trend line, support resistance, the key. That's it. Support resistance is your key. That's it. So that's one example. This will be applying to every single stock, not just SPY, QQQ, IWM, whatever you're trading, Facebook, Apples, whatever. These lines are watched by everybody. It will be a little different by a few cents, but the lines are trend lines are trend lines. So I think that's all I have. If Maria wants to take over and just end this class. If you guys have
Hmm.
any other questions, please feel free to message on StockTwits or if you're a Black Box member, if you can easily DM or just tag me in the chat room. I'll gladly answer your questions. Um, and I will have my video out for this coming week, what stocks that I personally am watching and the direction of it, what I see. So that's all for this particular video. I know it's Mother's Day. I know it was wrong. I didn't think about Mother's Day, to be honest to you. So, but thank you for thank you for showing up and thank you for joining us today for this open session. And I hope it was helpful. I hope it was worth your time. But yeah, and it's also recorded, so it will be up on YouTube on my channel soon in a couple hours. So this will be up there. If you were unable to join or you missed or you joined late, you can go back and watch that video. And yeah, so thank you for joining today. I really appreciate it. Hope it was helpful. Hope it gave you the sense of what to look in the market. Obviously, I'm not saying what I showed you is going to work out exactly the way I showed you, but just it kind of just gives you this sense of what can happen, where the market can go. So just watch those levels. Like I said, obviously there will be few cents, 30, up and down and stuff, but it gives you the idea of how to watch them, how to draw them, what I am seeing. So that's it. So and feel free to message me. Feel free to DM. We are here to help. So that's it. Thank you for joining, and I hope you all have a great Mother's Day. Enjoy your time with your family today. So that's about it. Thank you, guys.
Thanks, Vishal. Guys, thanks for joining us. Again, if you have questions, feel free to hit us up in chat or DM us. Happy Mother's Day. And Vishal, thank you. Awesome, awesome, awesome class as always. Take care,
Thank
y'all.
you. All right,
Bye.
guys. Thank you. Bye.